Welcome back to Let's Talk Tax. I'm Dave McGuire. Today we're looking forward to the 2026 midterm elections and what it could mean for federal tax policy. Joining me today is Ashu Mahal. Welcome, Ashu.
Thank you, Dave.
So every couple years we see these elections come up, and obviously we had the big federal election. Those tend to get the most national kind of airplay, and we hear about it when it's a big presidential. Obviously we had President Trump running last time. We had Biden administration policies, everything else. But I think we've got right now with the midterms coming up, it could be another inflection point. So today we just want to talk about how that could affect. Obviously, we've seen these big bills like the One Big Beautiful Bill. We've seen tariff policy changing and what it might mean if there's a change in Congress, what it might mean if Congress stays the same. So just to kind of set the stage a little bit, Ashu. In November, we're going to see all 435 congressional seats up for re-election, as well as about 35 Senate seats. So over the last few years, President Trump's been able to work with a unified Congress where Republicans have had the presidency, they've had the House, they've had the Senate, they pretty much have the Supreme Court as well. And really what could happen if we see that change? Obviously, we could see it stay the same. Republicans could sweep these. But historically, the party in charge doesn't do well in midterm elections, so there's a good chance that they lose at least the House, if not the Senate as well. Now, less worried about kind of the state and local side. Let's concentrate on the federal side. So we had the One Big Beautiful Bill Act. Do you really expect that there's going to be much change to anything that was in there if Democrats win, or obviously if Republicans win this coming time election cycle?
Thinking if Democrats win, I would expect little change, but
Personally, I don't think you're going to see much of a change either way. If anything, if Democrats win, you're probably going to see a stagnation because they won't have enough votes to overturn anything. They won't have the presidency, anything else. They're going to be going after, they're going to be trying to slow down the government through potentially impeachment proceedings or other things that maybe keep new policy, but they won't have enough votes to overturn old policy. So now if Republicans win, then they can start working to see if there's other areas within OB3 that they want to accelerate and go after a little bit further, would be my thought process.
I'm thinking for like Republicans, if they win, it's going to be more supporting the U.S. companies, more domestic policies.
Mm-hmm.
They're going to push for either maybe another OB3 policy, like more domestic incentives where they are going to push the corporations to push more manufacturing to U.S. versus offshore.
What are some of the ways that before this, obviously when the presidents had both the House and the Senate, what are some ways that they've really tried to motivate people to onshore and get rid of offshore manufacturing?
One of the areas is providing FDII deduction. If you are exporting goods manufactured in the U.S., they would provide a FDII deduction for that. Other area would be immediate R&D expensing, which was available post like OB3. Prior to that, you had to do capitalization. So they provide more incentives to manufacture domestically.
So let me ask you a question. What you said the FDII deduction. What is the FDII deduction? Because obviously you're an international tax expert. I'm not, and probably a lot of the people listening to are not. So when you say there was a FDII deduction, kind of explain that.
The FDII deduction stands for Foreign Derived Intangible Income. So that's the income the U.S. companies earn by exporting goods offshore. So you can offshore export goods either in a company or a third party, but there are specific rules when you export them in a company and you have to follow those. So when you export them, there's a deduction allowed by the U.S. government, which is around 37.5%.
Mm-hmm.
So it reduces your income by that rate.
So you mentioned with OB3, was that changed under OB3 or have Republicans changed that as they've been in power? What's the history behind that?
So prior to OB3, the FDII deduction was more complicated. because you had to have interplay with the foreign tax credit, and there was expenses that were apportioned against the FDII deduction, such as R&D expense and trust expense. But OB3 limited the expenses that's going to be apportioned to the FDII deduction, which allows to take an easier deduction. And in addition, OB3 allowed for no Q-buy reverse, which is if you have property domestically, it was deducted against your FDII source income. But post OB3, you are no longer need to do that.
So the way I'm looking at it, your thought is that policies similar to that are pushing for domestic production, if the Republicans maintain control of the House and the Senate, as well as the presidency, we expect to see some of those increase. But have Democrats historically not pushed as hard for those, or is it the simplification of it, or do you think it's just that they want to accelerate some of those things if you see a continuation of one kind of a unified party in government?
I would say a continuation, unified government, one party. Democrats usually tend to more follow the global rules. For example, the Pillar 2, which was in play before, but when the Trump administration started, they pretty much said U.S. is not going to follow the Pillar 2 rules. We have now side-by-side system. Mm-hmm. So basically, if you're a U.S. multinational, you're no longer required to follow the Pillar 2 rules. Whereas under Biden administration or prior to that, Democrats, when Pillar 2 was still coming into play, U.S. multinationals were also forced to follow the Pillar 2 rules.
Assume that I know nothing about international tax. What's Pillar 2?
In simple terms, Pillar 2 is a global minimum tax. So globally, on all your earnings, you're required to pay 15% minimum tax to the multinational. For example, if you are a U.S. headquartered multinational, you have businesses globally, Europe, India, anywhere, and then you need to put all those earnings together, consolidate, and at least pay 15% minimum tax on those earnings. Mm-hmm. And generally, wherever the multinational is headquartered, that's where you pay the top-up tax.
So it seems to me that, obviously, at least in your opinion, and I would agree with you on this, is that if Republicans maintain control of all houses, they might try to do things to really continue to incentivize companies to move to the U.S. or conversely de-incentivize them from doing manufacturing overseas. If Democrats take control of either the House or the Senate, would they have enough power to really change any of the policies that we've seen under OB3, or would we probably just see a continuation of whatever rules are in place as of the time of the midterms, at least through the next election cycle?
If Democrats win either House or Senate, I would see continuation of the policy because they're not going to have enough power to overturn anything, and we probably have to wait till the next election to see a big change if there will be any.
So that's obviously, as we're talking about this, that's some of the federal tax rules. So we're talking federal income tax. Obviously, you deal a lot with international compliance and some of the areas there. One of the other areas of taxation that we've obviously seen up and down over the last couple of years is the tariff conversation. So we saw the IEEPA tariff regime where the Trump administration put on these tariffs, and that was ruled unconstitutional by the Supreme Court, and they've been refunding it, but they've been looking for other avenues. If Republicans take control, do you think that will continue, and do you see a difference if Democrats have more power and push back on the presidency in terms of tariff regime and other things moving forward?
If Republicans win, I would say that they're going to push more for collecting tariffs because that's what they believe is going to help the domestic companies. Whereas on the Democrats, if they win, they would push back on the president not to collect tariffs because they want to support more global economy versus just the U.S.
So it's really the policies of the Trump administration. It's not really that the Democrats will have enough power to do much of anything. They might just push back on some of these policies that the president has been pushing versus Republicans will be more of a checkbox and actually help accelerate some of that, is what you're thinking?
Yeah, Republicans might help. I agree with you on that. Republicans will help in accelerating some of the Trump policies if they control both.
Now, obviously, with a lot of changes like that, so let's say this election would happen in November, and we'll probably know who's going to control the House and Senate by within a day or two. I'd like to say the day of, but that never happens anymore. There's always kind of waiting for votes to come in, waiting for things to be counted. With that, though, creates a lame duck session. Historically, the lame duck session has seen when there's a transition in power. I'm looking at specifically the Biden administration. Biden lost some power in that midterm, and there was going to be a new Congress starting, and there was a negotiation fury right before that midterm, so that new Congress took over in 2022. I would expect to see some of that as well this time, that if Republicans lose control of the House and Senate, but they maintain the presidency, do they push for more policy changes right kind of towards the end of this year to really kind of cement a few of their changes in right before that changeover? Would you expect to see that, or do you think there's going to be enough way for Democrats to kind of stall a little bit?
With a lot going on right now with the war and then gas prices going up, I feel like it's going to be tough for Republicans to accelerate something right before the end, because they have a lot on their plate already to resolve the international global issues. And I highly doubt that it's going to be easier for them to push like a tax policy change at that time.
So you don't expect I know there's been a lot of talk about a reconciliation 2.0. I think it's going to be harder and harder. It sounds good in theory, and it plays really well on the news, but it's harder in practice.
Yeah, I agree. It's going to be really hard in practice to push for that.
Now, I know historically Republicans have really been pushing for this kind of onshoring of manufacturing. Democrats have often pushed for a lot more energy policy, which the One Big Beautiful Bill pulled back on a lot of that energy policy. Not when I talk about energy policy, more the energy conservation and alternative energy, whereas the Republicans tend to push for more fossil fuel policy. Is that something that could be seen as a negotiating tool for the Democrats moving forward, where if they do take over more power and there is a priority of the Trump administration or a priority of the Republicans, do you think they might use that as a negotiating tool and say, okay, we'll help you with some of your policy if you maybe pull back on some of the more restrictions you've put on energy policy over the last couple of years?
That could very well happen. Nothing would surprise me. Especially, I think about the TCJA days. Nobody thought that a bill is going to come in December, but Trump administration signed it at that time, and we had to follow it. It was at the end of December 2017. Nobody expected right before Christmas to have a big tax law change.
I always tell people it always seems like we always get the tax policy or regulations right before holidays. So whenever we're waiting for regulations, it seems like it comes out right before. And you said that, and I had actually forgotten it came right before Christmas, because I always think of the September 27th date, that it was retroactive to a lot of the policies, but it was really that it came out right before Christmas. Now, as we look forward, obviously, we're both trying to talk about the facts only and kind of be as apolitical as possible. We've seen a lot more movement on executive orders and other things where, and we use tariffs as an example, where the Trump administration has used a lot of executive orders to try to implement change. Do you see, obviously, with a potential of a transition in Congress, do you think that will get some pushback and maybe some other legislative powers might be used to try to kind of tighten the reins a little bit on what the presidency is allowed to do if we see a changeover?
Knowing our president, it would be really tough. But yeah, I would see like they would try it, but maybe they might just override or veto the executive orders after like the Congress takes over. But there's a possibility that we would see the executive orders, but how they're going to be implemented, that's going to be tough.
As we're getting into year-end planning, it doesn't sound like, although there might be a lot of changes that if Democrats take over that might affect the power of the presidency, the power of executive orders, tariffs, and other things. But in terms of most tax policy, it doesn't sound like you think either, even if the Democrats win heavily or the Republicans win heavily, we're not going to be seeing wholesale changes like we did with the TCJA or OB3 or anything else going into next year. So we're talking about tax policy, probably planning on somewhat of the status quo is probably a pretty safe bet at this point.
Yes, I agree with you.
Is there anything you think that might change that as you kind of look in a crystal ball? And we won't hold you to it, but is there anything that you could see that might change any of that, where maybe there are some things that could be pushed a little bit heavier moving forward?
If Democrats win, the one thing I would say, the Pillar 2 comes into play. That might change heavier versus anything locally federal tax policy, because Democrats were heavily supporters of Pillar 2 along with the OECD.
And the Pillar 2, that's that basically
50.
international kind of global minimum tax you were mentioning earlier.
Yeah, it's just not the tax itself, it's the compliance burden that's going to come along with it, which is a lot for a multinational, because you are supposed to file the reportings with your U.S. multinational. If you are a U.S. multinational M&E, then you would be filing in the U.S. But along with that, each local jurisdiction has their own separate filing requirements, so you have to follow those also.
So, Ashu, as we're kind of trying to think through different policy changes right before we kind of close up today, one of the things I've been thinking in my head is I know Republicans really tend to push for less taxation on capital gains and dividends, versus Democrats tend to be pushing more for that. Obviously, we're seeing a pushback on, and especially a lot of Democrat states, more for wealth taxes and other things. If Republicans do maintain control and are able to push on dividend taxation on dividends and capital gains rates and get that to a lower percentage, is that going to have an effect on things like IC DISC and other areas?
Yes, that would definitely impact the IC DISC, because currently on average we save around 5% rate because of the QBI deduction that we have on the partnership income. Mm-hmm. But going forward, if the dividends are taxed at a lower rate, then you could, depending upon where it is, you can go from like 5% to 10% or 15%, which can help taxpayers save taxes.
So, Ashu, it sounds to me like this election cycle, we don't expect to see a lot of wholesale tax changes. We might see some pushback from Democrats if they win on the power of the executive branch. However, we're not going to see that wholesale change on OB3 really until we see potentially a new presidential administration or something else happen in the next couple of years.
Yes, I agree. I don't expect a big change to TCJA or OB3 because of the midterm, unless something drastically big happens or something happens in like 2 years when the final elections happen.
Well, it will be interesting to see. I appreciate you joining me today, Ashu. And if anybody does have questions or concerns about how this affects, obviously, Ashu, you're a great expert in some of the U.S. international areas, and that was kind of evident today when you start talking about phase 2 and GILTI and other areas that me, as somebody that came from the depreciation, the federal side, and kind of the U.S. side, I know a little bit less about. But if people do have questions, I'm assuming they can feel free to reach out to you and kind of talk through some of those.
Yes, people can definitely reach out to me to talk about GILTI, FDII, foreign tax credit rules, 987, Pillar 2.
Perfect. Well, I appreciate your time today, and I thank everybody for listening. Thank you.
Thank you, everyone.